We're gonna learn about describe the basic business activities and related information processing operations performed in the expenditure cycle. Second, discuss the key decisions that must be made in the expenditure cycle and identify the information needed to make those decisions. Number 3, identify the major threats in the expenditure cycle and evaluate the adequacy of various control procedures to address those threats. Expenditure cycle is a series of business activities and information processing operations related to the purchase and payment of goods and services. It's an important process in business that involves spending money to get products or services. The purpose of the expenditure cycle: expenditure control. With the structure process, companies can ensure that every expense is properly planned, authorized, and recorded. Operational efficiency. The expenditure cycle is designed to improve operational efficiency. Number 3, financial risk management. The expenditure process helps companies manage the financial risks associated with purchases and expenditures. Next, policy and legal compliance. The expenditure cycle ensures that all company activities are in line with internal policies and applicable laws. And the last one, vendor performance monitoring. As part of the expenditure cycle, companies can track and evaluate vendor performance. And here the expenditure cycle and primary goal in the expense cycle is to minimize the total cost of acquiring and maintaining the inventory, equipment, and various services a company needs to function. To achieve these goals, management must make the following important decisions, such as what is the optimal level of supplies and equipment to have, which suppliers provide the best quality and service at the best prices. How can a company consolidate purchases between units to obtain optimal prices? How can information technology be used to increase the efficiency and accuracy of inbound logistics functions? How can a company maintain sufficient cash to take advantage of any discount suppliers offer? And the last one, how can payments to vendors be managed to maximize cash flow?
Basic expenditure cycle. First is order raw materials, equipment, and service. These orders are important in the cash disbursement cycle because they affect account payable and ultimately the company's cash flow. Smoothness and efficiency in every ordering stage ensure the company can operate optimally without interruption. Second, receive raw materials, equipment, and service. This stage involves inspecting the goods or service received and ensuring their conformity with the order, as well as managing documents related to the receipt. Third is approved supplier invoice. This process ensures that the company only pay invoices that are valid and correspond to the goods or service that have been received. The main goal of invoice approval is to avoid payment errors, ensure transaction accuracy, and keep cash flow efficiency. Fourth is the cash disbursements. Companies make payments to the supplier or service providers in return for goods or service received. This process not only includes the physical disbursement or of money, but also ensure that the payments are made according to agreed procedures. Expenditure cycle information system activities. Expenditure cycle information system is a system used by company to manage the purchasing process, receipt of goods or service, and payment to suppliers. The system facilitates recording, tracking, and control of company expense. The main goal is to ensure that the company manage expense efficiently, avoids funds, and manage cash flow well. This is a comparison of revenue cycle activities and production cycle. Expenditure cycle information system process. Each department can send requests to purchase goods. Once a purchase request has been approved, the system will retrieve the inventory master file to identify suitable supply for the goods. The system then creates a purchase order which is sent to the supplier via ADI. The receiving department has access to open purchase order file, so it can plan and verify the validity of shipment. Deposition notify of the order so that it can be planned pending financial commitments. The department that generate the purchase request is also notified that the request has been approved. So this is a system design overview ERP to support production cycle.
Trade and control. The entire expense cycle activity depends on an integrated database containing information about supplier, inventory, and purchasing activity. The third example is general issue truth of entire expenditure cycle, such as inaccurate or invalid master data, unauthorized disclosure of sensitive information, loss or destruction of data, poor performance. 2. Ordering activity, stock out and excess inventory, purchasing item not needed, purchasing at inflated prices, buying inferior quality goods, unreliable suppliers, kickbacks. The control of example, general ISO throughout entire expenditure cycle is data processing integrity control, encryption, backup and disaster recovery procedures, managerial report. 2. Ordering activity is periodic physical count of inventory, review and approval of purchase requisition, competitive bidding, purchasing only from approved suppliers, collecting and monitoring supplier delivery performance data, and job rotation and mandatory vacation. The third example for approving supplier invoice is error in supplier invoice and error in posting to payable. 2. Cash disbursement activity is duplicate payment, theft of cash, paying for item not received, cash flow problem, failure to take advantage of discount for prompt payment. The example control for approving supplier invoice such as verification of invoice accuracy, requiring detailed receipt for brochure card purchases, data entry controls. Cash disbursement activity, requiring a complete voucher package for all payment, access control to EFT terminal, verification of all receipts for travel expense, cash flow budget, filling out invoices by due date for discount. And next is order raw materials, supplies, and service. Economic order quantity or EOQ is the optimal order size to minimize the sum of ordering, carrying, and stock out costs. Materials Requirements Planning or MRP is an approach to inventory management that seeks to reduce required inventory level by improving the accuracy of forecasting technique to better schedule purchases to satisfy production needs. Just-in-time or JIT inventory system is a system that minimizes or virtually eliminates inventories by purchasing and producing goods only in response to actual rather than forecast sales. There are the diagram arus data tingkat 1, memesan bahan baku, perlengkapan, dan jasa.
Next, I will explain about selecting suppliers. There are several factors that should be considered when selecting a supplier. The first one is price, second is quality of materials, and the third one is dependability in making deliveries. Once a supplier has been selected for a product, the supplier's identity should become part of the product inventory master record to avoid repeating the supplier selection process for every subsequent order. Purchase order is a document or electronic form that formally requests a supplier to sell and deliver a specific product at a specified price. It includes the name of the supplier and purchasing agent, requested order and delivery dates, delivery location and delivery method, and also the information about the items ordered. Blanket purchase order or blanket order is a commitment to purchase certain goods at a specified price from a specified supplier for a specified period of time over a year. Threats and control in the expenditure cycle. First, price list
for frequently purchased items should be stored in the computer and consulted when orders are placed. Second, competitive bidding. Written bids should be required for high-cost and specialty products. Third is budget. 2. Purchasing goods of inferior quality. To control it, first establish a list of approved suppliers known to provide goods of acceptable quality. Second, review purchase orders are reviewed to ensure that only these approved suppliers are used. Third, the accounting information system must collect detailed product quality data. And fourth, purchasing managers must be held accountable for the total purchasing cost. 3. Supplier performance is unreliable. Requires these suppliers to be certified as meeting international quality standards. Accounting information systems should be designed to capture and track information about supplier performance. 4. Purchasing from unauthorized suppliers. To control it, the ERP system should be configured to prevent the issuance of purchase orders to suppliers that are not in the approved master file. All purchase orders are reviewed to ensure that only approved suppliers are used. And 5 is kickbacks. Companies should prohibit purchasing agents from accepting any gifts. Job rotation. Purchasing agents should be required to sign an annual conflict of interest statement. Next is receiving. The receiving department is responsible for accepting deliveries from suppliers. It usually reports to the warehouse manager, who in turn reports to the vice president of manufacturing. The inventory stores department, which also reports to the warehouse manager, is responsible for storage of the goods. Information about the receipt of ordered merchandise must be communicated to the inventory control function to update the inventory records. And this is the level 1 data flow diagram receiving.
The receiving report records details about each shipment, including the date received, shipper, supplier, and purchase order number that will be discovered during this process. First, receiving a quantity of goods that is different from the quantity ordered. Second is receiving damaged goods. Third is receiving inferior quality goods that fail inspection. And then we have threats and solution for this topic. The first threat is receiving delivery of unordered goods, and the solution is review purchase orders with physical goods received. Second threat is making mistake in calculating the goods received. And then we have solution is first the company design the requisition processing system. Second is processing system so that when reviewing an open purchase order, the receiving dock workers do not see the quantity order. And the third threat is difficulty establishing that the service is actually being performed. And the solution from this threat is actual versus budget cost should be routinely compared. And then the fourth threat the last threat is inventory theft or pencurian persediaan. The solution from this threat is inventory should be stored in a secure location with a limited access. And the second is all inventory transfers within the company should be documented. The third is periodically count inventory on hand and reconcile the count with inventory. Okay, next topic is approving supplier invoices. After a supplier invoices is received, the accounts payable department is responsible for matching the supplier invoice with the corresponding purchase order and receiving report. The combination of the supplier invoice and the related receipt creates what is called a document package. Once the approver confirms that the company has received the ordered goods, an invoice will be issued for payment. And we have two ways to process supplier invoices. These methods are used in accounts payable management within a company.
This management involves the recording, tracking, and payment of invoices from suppliers who provide goods or services to the company. First, we have non-voucher system. The non-voucher system does not use voucher to track invoices and payment. When a supplier invoice is received, the accounts payable department immediately compares the invoice with purchase order and receiving documents without creating voucher. And then the next is voucher system. This method uses a voucher and additional document issued for each supplier invoices. The voucher records the details of the invoice and ensures that all verification processes are complete before payment. It is also simplifies tracking and internal control, especially for companies that handle numerous invoices. Voucher systems have a benefit over the non-voucher system. First is reduce the number of checks that need to be written, multiply invoices in one voucher. Second is disbursement. Voucher is an internally generated document. Third is the voucher provides an explicit record that supplier invoices have been approved for management. And this is a traditional three-way matching. You can see in the screen.
And now, we're gonna move to the Evaluated Receipt Settlement or ERS approach. ERS approach is a method in accounts payable management that replaces the traditional three-way matching process, supplier invoice, receiving report, and purchase order, with a two-way matching process, namely between the purchase order and receiving report. ERS work process have three work process. One is good receipt. When the goods are received, a receiving report is created to record the delivery details, including the quantity and quality of the goods. 2 is matching. The system automatically matches the receiving report with the relevant purchase order. 3 is payment. If the match is successful, payment is made directly to the supplier without the need for a physical invoice. Cash disbursement. So, the conclusion is have a 4 conclusion: cash review, separation of duties, payment process, and payment method. And now, the potential threat and solution. 1 is errors in supplies master data. The solution is data verification, information system integration, and control producers. 2 is unauthorized disclosure of sensitive information. The solution is use authentication, physical access double control, and double check the invoice accuracy. 3 is failure to take advantage of purchase discount for timely payment. The solution is financial planning, effective communication, and technology implementation. And from all the material, we have conclusion that basic business activities include essential processes such as ordering, receiving, approaching, invoice, and paying for goods or service. These processes are related and crucial to effective resource management, good operational performance, and financial integrity of the company. Ensuring all transactions are carried out with high accuracy and efficiency.